So, guys, onward and upwards to the final part of the beginner's guide to forex trading. So, if you're hearing any background noise, please just ignore that. I'm actually in the office again, and I don't think my laptop filters out background noises. So, just stay focused to my voice and forget any other thing at the background. So going into the final part of this, so that's the advanced part two. Remember what I said before that I am writing this out at the advanced part two with red. Why? Because this is the most important part of trading. You can be a lord or a god in technical analysis or in fundamental analysis. But once you don't get things that are listed in this advanced part two, once you don't get them right, you can never go anywhere in trading. This is the real trading itself. So trading is 90% psychological because everything we're going to talk about here is what builds your psychological discipline. Trading is 90% psychological. Well, let's say 80% psychological. Then we have 15% technical and I think 5% whatever. So you just have to understand that this is the gap between you succeeding in this game or quitting. Okay. So moving on from that, so the first topic we're going to treat about on this is trading edge. So what's an edge? An edge in the forex markets refers to a systematic advantage or set of advantages that a trader has over a long run, increasing the probability of making profitable trades. Having a trading edge is a critical component of successful trading as it helps traders achieve consistent profits over time. Okay, so if you actually read this, if you um understand what this statement is saying, what this description. I don't know what these people are making too much noise. So I just hope you can hear me. So if you actually understand what this is saying, it is actually referring to being profitable over the long run, not being profitable over a single trade or two trade or in a week. It's indicating being profitable over the long run, like when you let's say 6 months, a quarter, a year. So a trading edge is what keeps you profitable over a long run. Okay, so a lot of people, a lot of newbies now, not now, even from the start of this forest thing, everyone is looking for that holy grail, that 100% win rate. That trading strategy you will be using and you don't lose a trade at all. So everybody's looking at Instagram, all these gurus, all these mentors that are posting profits. They post profit, they don't post losses. And what people fail to understand is that losses are part of the game. I'm not saying that people can't go on win streak. You can go on 10 trades win streak, on 20, 15 trades win streak. But that comes with time, that comes with effort. Before you can go on a win streak with your edge or with your strategy, at least you should have at least 5 years of solid experience on that particular strategy, not on different strategy, on a particular thing. You have been doing one thing for 5 years. That's the only thing that can guarantee you. Let's say 5 years. No, 5 years is too much. It's actually too much. But let's say you've been doing that for 3 years straight and you're trading that same strategy only. So that means you know the strategy in and out. You haven't jumped from this to this. That's the only thing that can actually give you a shot at having a prolonged win streak. Okay, so let's continue. So here are some key aspects of a trading edge: strategy or methodology. So first thing, an edge should have a strategy. You need for you to have a good trading edge. That edge must have a good strategy that have been proven. Okay, so what is actually recommended for new traders is that if you want to pick an edge or a strategy, most times it's better and it's easier to just do copy and paste. Okay, it's easier to do copy and paste than for you to work on building your own strategy, because working on building your own strategy is going to take you a hell lot of time, a whole lot of time. I'm actually one of those who actually built my strategy over time. Okay, like the strategy I'm trading, the way I trade, no one taught me. I actually built that from scratch and from the informations I've been gathering from all my years of experiences. Okay, so and I can tell you, it's very difficult. Like it's very difficult for you to get your own strategy by yourself. It's difficult. It's not impossible. It's very very possible, but you have to be like you have to be very committed to be able to go through the learning curves while trying to build your own strategy, because it's very difficult for you to find something that works over time. Like in a year, it gives you profits. 2 years, it still gives you profit. 3 years, it still gives you profit. Okay, so it's always advice for new traders to find someone who you know is profitable in the market and just copy their strategy. If they are willing to share, just copy it. So if you have a mentor that already has a strategy, you can just copy your mentor's strategy and be using it. Then work on it and find a way to make it suit you, because you and your mentor are not the same. So that strategy might fit in very well, but you can take it and you still be losing while he's winning. Okay, so it's all about self mastery. So that's about strategy. And what is involved in strategy is finding, like, how do you want to be trading? Do you want to be a swing trader? Do you want to be a scalper? That's number one. Then, what are you looking for in the market? Okay, the strategy should contain what you're looking for in the market. How do you want to enter a trade? What are the things that you will see before? Let's say you have, how many configurances do you need? Like what I explained when I was teaching you about trend and support and resistance and candle confirmation. You can say, okay, my strategy now will be, I see a trend, a downtrend maybe, and then I see a level of support during that downtrend, and I draw my support level. I see price struggling to break that support and then breaks the support, and then I will wait for price to come back and retest that support. On the retest, I will wait to see a candlestick confirmation. Once I see a candlestick confirmation, I will enter and have my 20 pips stop loss, and I'll be this. I have my 20 pips stop loss. Okay, and then I will target the previous low. I will target a price point. Okay, that's an example of a strategy. You can also say it will be a downtrend. See a support level, price struggle, and break. Immediately, price breaks and close below that support level. I don't need to wait for a retest. I just enter and have my stop loss at this level. Okay, and then you incorporate risk management. That's number two here. Okay, risk management. How much do you want to risk per trade? Okay, how much are you willing to risk? Risk management, the term risk management. I think people see that is something that people confuse in this industry. Risk management. Everybody thinks that risk management is when you are using 0.01 lot. Okay, when you are doing being covered, is conservative. No, risk management has to do with you. It's something personal. Okay, I might be able to risk 10% of my account per trade. You might not be able to reach 10%. Another person might be able to reach 50%. I cannot be able to reach 50%. So management has to do with something. You are the one that has to decide, what am I willing to risk per trade. That when I reach this thing, I will not be bothered. As long as you reach that time, you will be bothered. You are actually going above the line. You can ruin yourself. You have to, yes, say to yourself, yeah, this is what I'm willing to risk per trade. I'm willing to risk $1. I'm willing to risk $10. I just, with that risk manager, just trade. Just trade. If you lose, forget about it. If you win, forget about it. Go to the next trade. Keep following your rules. Don't change your strategy. Win or lose. Okay. Then you have psychological discipline. How do you maintain your discipline? How do you maintain your psychology? So the best way to maintain your psychology and to stay with your edge over the long run is how to think in probabilities. Just know that this game is a game of probabilities. Okay. I actually explained that. I think here I explained all that about probabilities. So let me still run over that. So thinking in probabilities is the best way to give yourself chances of staying long in this market. So for you to be thinking on a trade by trade basis, okay, you lose a trade, you're you're emotionally down because you lost a trade, or you won a trade and you are very happy. That's going to kill you. Okay, you can't be having emotional roller coasters every single day. Okay, you are winning, your emotion is up. You're losing, your emotion is that can send you bipolar. It can send you bipolar like shit. So you have to think in probabilities. Think in a series of trades, not trade by trade basis. So it's like having a coin. If you have a coin and you're doing a coin flip, head or tails, your edge in the market, you don't in trading, forget about your analysis, forget about your bias and this thing. You don't know what's going to happen. You might have a bullish bias and all that. You have painted your chart. Do this. Like if you look at some of these traders that trade smart money, I'm not saying they make money. Everybody make money. If, whether you're trading smart money or trading retail, as they call it, everyone makes money. So, but you look at this. I remember when I was trading smart money, bro. I used to take time to paint my charts, draw this, draw that, market structure break, this one, that one, that one, that one, and then I will plot my zone where I want to enter. Everything. It will take like an hour to do all those things. And suddenly you see the market comes to my entry zone and just blast through my stop like it's not even there after all my analysis that took me hours to do. So the market doesn't really care about the market doesn't really care about all those things. So you need to well NFP 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 is doing bits. NFP is doing bits. So I'll actually be I'll actually be stuck in this if this candle can close above this blue line. Okay, if you can close above this blue line, I'll be interested in buying. If you can close above this blue line, I'll be interested in buying GU. Okay, let's just watch. Is I think it's just 6 minutes for this candle to close. Let's see what happens if you can stay above this blue line. So you have to know that it doesn't matter what you think. The market is going to do what it's going to do. You just have to believe in your edge, that your edge is going to work over time. So I was using an analogy of a coin flip. So you have head or tails, and you believe that head is okay. Let's say head is if you flip the coin and you get head, that means you win. And if you flip the coin and you get tails, you lose. An edge is what puts the odds in your favor that you are going to have more heads than tails, or you're going to have the same number of head and tails, or you're going to have slightly lower heads than tails when you do the coin flip like 10 times. But what you should understand is that you will never know at which flip you get head and at which flip you get tails. Okay, let's say you have a 50% win rate. That means when you take 10 trades, you're going to win five and you're going to lose five. So then let's do it with a coin flip. Okay, you know that when you flip this coin 10 times, you're going to get heads five times and you're going to get tails five times. Are you telling me that you're going to know? That if you want before you want to flip this coin, that you can tell that this thing is going to come out heads. No, you might flip the coin and you get like four straight heads, and then you get tails, and then get head, then tails. That makes it 5/5. Or you can flip it and get heads first, and then flip it tails, then heads, tails, head. It's random, so the outcome is random. So that's what you should have in mind while trading. That's the outcome of every of a trade by trade basis is random, but the outcome of a series of trade is predictable. You can predict that after a series of trade, like 20 trade, 10 trades, I will be profitable. But on a trade by trade basis, I don't know what's going to happen. I don't know if I win. I don't know if I will lose. Just get that in mind. Then, with risk management and risk reward, which I'm going to talk about, that will put the odds in your favor that you're going to be profitable over the long run. Not each trade that you take. Each trade that you take is not going to determine whether you're going to be profitable in the long run. That's why a lot of people blow their accounts and they just go all in on a single trade, forgetting that it takes time. It takes time. Okay, so still monitoring GJ. Okay, nice. So I'm going to pause. I think I'm going to pause this video and I will come back. I'll come back once I'm done looking at GJ. Okay. So guys, God, fuck. This is actually the reality of trading. Remember, I told you guys I was looking to buy GU. I was looking to buy GU if you can stay above any of these levels. But you know what happened? Like I fucking flipped my charts. Like I flipped it. I wanted to see if this level actually held, and I flipped my charts for it to look like a sell, so I can take a look at this very well. And when I saw it, I didn't remember to flip my chart back. So this thing was looking like this. And I took I picked up my phone and opened my NT4, and instead of pressing buy, I pressed sell. I hit sell instead of buy. And bro, this was where I was supposed to buy, but I hit sell. And now see this thing is running up to almost like 30 that that's 3 pips in profit. And I lost money. So as I sell, when I realized price was around here, so I waited for it to come down. So I just closed out the position around 10 pips or so. This is so draining, bro. It's so energy draining. How could I have let this happen? God, this is just a costly mistake. This is a mistake. It didn't cost me that much. It would have cost me a lot if I held this trend, hoping for it to reverse. But God, damn it! So this is a trade I should be banking on, and I was predicting this that NFP is going to drive price down, and if you can hold this weekly grid here, we reverse. And now look what happened. It's just a mistake. It's a mistake. I didn't lose a lot, but come on, what was I doing? I'll just look to add positions as this keeps going up. But my mind has been ruined. Like this was a very good trade. As if I take a buy here, once you break above this and this candle closes above, I'll add another position here. Look to add another position here. See you. This is like 149 pip move. Then when you start scaling it, you should be around 250 pips or so. And I've messed that up. It's just a costly mistake. But we just move on from that. We just move on from that. Just move on. Just move on. Can't let this ruin our day. Damn. So this thing don't mess my head. It don't mess my head. So I've already talked about psychological discipline using, like I was talking about psychological discipline using the coin flip. Okay. So remember that I said that when you are when you're flipping the coins, you don't know which one will come out heads or tail. Like the way I just took this trade now, I don't know if this trade is going to be a winner or a loser. I just took this trade because I believe that I'll see my edge, and I believe that my edge will work over time. So if I see this type of trade and I take it 10 times, I believe that my edge with my edge, I can win 5 times and lose 5 times. Then with my risk reward, as you can see, this is about 1 to 7.45 risk reward. Okay, so it's a good risk reward. That means when I lose one. When I win seven. So I add plus seven when I win, and when I lose, I minus one. So that's what this risk reward to be. This risk reward is showing. These are my targets and this is my stop. So if you have a good edge, even with a 30% win rate. So as I have 1 to 7, if I have a 30% win rate, that means I can lose seven and win three. So if I lose seven, that's minus seven, and if I win three, each one I've already covered for all the losses I've made. Then you have win like extra two again. That's plus 14. So your net profit of 14%. Okay. Then another thing in developing your edge is backtesting and analysis. I cannot emphasize on backtesting. You need to backtest. So you need to backtest every day. You need to backtest. You need to be on the market backtesting. Backtesting is the only thing that can give you confidence in your edge. With backtesting, you can be so confident in your edge that you are not even scared to pull the trigger. Like this trade I just took here. I'm not scared. You can see this is wrong. I was not scared to pull the trigger here. Once I looked at it very well and found out that it did close above this and it held this grid, I was ready to pull the trigger. Okay, I was ready to pull the trigger immediately. Now you can see the trade is running. It's running 40 pips. Okay, so you need to backtest. Backtesting is what gives you that confidence that this thing actually works. So you need to also have deep understanding of market knowledge. So and this comes with practice over time. You need to practice. You need to keep practicing every day. So if you're looking at charts every day, you understand what's going on. Okay, adaptability. You need to adapt. Then you need to use technology and other tools to make sure that you put the odds in your favor. Like TradingView is a very good tool. Your journaling tools, all of that, your phone, your laptop, they are the things that make trading easier. You need to find a way to keep trading simple, make it easy for you. Okay, then you have to be learning continuously. Keep learning, keep recording. Okay, record all your trades. Record all your trades. Like this one, I don't even know what I will do. I will do to this trade now. I don't know if I will record this. Oh God, it's just it's, it's one of those days. It's one of those days. It's just fucking mistake. I don't understand this mistake. Okay. So these are things you journal, you record them, and put in your journal. So when you're back testing, you look at this and you say, okay, I had this trade here, and this why this trade was like this. So when you see this thing again, you recognize that yes, this is my trade, this is my setup, and you can be able to take that trade again and take it over and over and over and over again. Yeah. This everything I explained there about coin flip is here. So read through this. I actually explained a bit more on this thing than I'm doing now. So I actually recommend you read this book, Trading in the Zone. So you go and look for this book. Can find it on the internet. So if you have an app that allows you to read, I think Light, you see Light Reader. allows you to download a few books, so you can see this book in light reader. You can also check markets and you can buy this. This is like the number one book for trading psychology, written by Mark Douglas. Okay, I recommend this book for every one of you. So risk to reward. So risk to reward in abbreviation we call it RR. So if you get 1 to 1 R, 1 to 5 R, that's your risk to reward. What are you risking to gain? Like no, what are you looking to gain from this risk? So it's actually what traders and investors measure to be sure that this trade they are taking, they are not wasting their time. Okay. For example, what I did, what I said here, this trade actually has a very positive risk reward. Very, very positive. I think any risk reward that is anywhere between 1 to 2, 1 to 3 is a very positive risk reward. 1 to 1 is also good. That means you're risking 20 pips, you get 20 pips. As you can see now, if I was in this trade and I decide to close, this is a 1 to 2, that means I'm making like twice my risk already for this trade. So that's what risk reward is. But now, with my analysis and my target, this is a 1 to 7 risk reward. So I'm risking 1 to make 7. Okay. Um, some traders actually use a fixed risk reward, and some traders make use of a variable risk reward. So they can decide that their risk reward will be based on their targets, what they think their target is. Some their risk reward will be fixed. So they say it doesn't matter how the trade is. I always use a 1 to 2 risk reward, 1 to 2.5, 1 to 3. Once trade hits 1 to 3, they take their profits. Even if it runs 1 to 15 or 1 to 20 or 1 to 100, they don't care. Just take your trade, get 3 times your risk, and you're out of the market. So it depends on you. That's what risk to reward is all about. So you can read through this. It has other information written there. So you can see flexible risk to reward. I think there's a rigid. Oh, okay, so it's either it's flexible or it's not. Okay, so you have to always think risk before you think reward. Okay, don't think reward before thinking risk. That's how you get into trouble. Thinking reward before thinking risk. You have to think, how much am I willing to risk on this trade? Once you analyze and ascertain how much you are willing to risk on a particular trade, then you can move forward. You can move forward. The results and the reward doesn't actually matter. What matters is the risk. Are you willing to risk something that you can manage, that you can be okay to lose? If you are willing to risk on something, then you can go for it. Don't think reward first. What am I going to make in this trade? And you forget about the risk and you start adding, because if you start thinking reward, you start adding so you can get bigger reward. Remember, bigger rewards equals bigger risks. Unless you want to get a 1 to 100 RR, which is eh, almost impossible. Okay, so always cut your losses short. Make sure you cut your losses. Okay, don't hold trade thinking that this is it will reverse. If your trade is going against you, okay, you have a stop loss. Leave your stop. Don't ever move your stop loss in this life, ever. Okay, you know one thing about moving stop loss is not it's not that you move your stop loss and the trade keeps going to your stop loss and you keep moving and it's still following your stop loss. That one doesn't teach you anything. Okay, that one doesn't say you actually take the pen immediately. What is going to kill you about moving your stop loss is that you enter a trade and the trade is almost getting to your stop loss. You move the stop loss up and then the trade reverses and maybe you hit TP, or you get a chance to go to break even and take your position off, that you didn't lose anything or you gain small money. That's what's going to kill you. Because next time when you enter a trade and you see price going against you, going to your stop loss, you might say to yourself, It's going to my stop loss. It's going to my stop loss. And you remember the last time you did this that it's worked, and you do it again. Maybe that time the market won't smile at you. Maybe that time is when the market wants to move fast and it goes like 100 pips without even you knowing, and you keep moving your stop loss. That time you blow your account. That's when it hurts the most. Okay, because if it happens to you the first time you took the pain, you would have learned immediately. So moving on from that, trading psychology. So trading psychology is the foundation of trading success. We need to be psychologically strong. We need to be mentally strong because overcoming trading curve is like the most difficult thing you will do in life. Overcoming the trading curve, the most difficult ever. Okay, so you need to be a master of emotions. That's why professional traders who have already gone through the ups and downs of trading, they are different breeds of human being. They are different from everybody else. Things that bother you doesn't bother them. Okay, because they have mastered their emotions. So here they say emotions. Emotions such as greed, fear, and overconfidence and anxiety can be a profound impact on trading decision. So let's say from what happened to me here on this particular trade. Okay, you can see that this trade is going my way, but I've already lost that money. And on the next trade now, I take the next trade, and this trade and the next trade hits stop loss. Like you can see, the trade I took is they actually hit stop loss. So let's see now, I took that trade and that trade hit stop loss, and then today this happens. And the next trade I take is trade hit stop loss. You can see my head will start. If I'm not emotionally strong, my head will start flipping. Okay, I will start having anxiety. So next time when I see my setup, I cannot take it. I will just be scared of pulling the trigger or something like that. So you need to manage your emotion. You need to make sure that you don't let fear get in the way of you making any trading decisions. Just follow your plans, follow your trading rules, follow everything. Also, greed. Don't be greedy. Don't be once the market gives you something, take what the market have given you. Don't be overconfident. It's not after you win it. You want two trades in a row. You win a trade. You are now you think you are now God. You can risk. You can go all in. You can risk everything. The day you try risking everything, that's the day the market will not even respect you. That's when you will be humbled. Okay, be humble. Be humble while trading. If not, you'll be humbled. Don't go out bragging, trying to create this thing, what they call it, trying to create issue with other people that these people don't know how to do. They don't know how to trade. You are the one that know how to trade. The market will humble you, and once it humbles you, you are done. You are done for life, unless you have the emotional strength to come back. Okay. So discipline, be disciplined. Be disciplined. Follow your plans, follow your rules, follow your routines. Don't deviate. Don't don't be like a monkey that cannot stay one place. Okay, be disciplined. Be disciplined. Be disciplined. Patience. Patience. Always be patient. Okay, always be patient when you are waiting for your setups. You don't have to be trading because the market is open. You have to be trading because your setup is there. That everything is aligned. It's like just like having the stars align. Okay, you have to wait for the stars to align, everything to align properly before you can take a trade. Let me use this as an example. It's still painful. Though. Let me use this as an example. For this trade already, I already have my daily bias aligned. With my daily bias, I already have my weekly, what I'm expecting for the week, what I'm expecting because we just entered the new month. I'm expecting something for on the new month. I'm expecting something for on the new week, and I'm expecting something on the day based on what's on the information the markets have given me in the past previous days. So this drop, this drop here now, I can't be in the markets looking to go short because I'm seeing this market drop, and I'll be looking for a way to enter short. No, you have to wait for the market to come to you. Okay, you have to wait for the market to do its thing. Let it do its thing and come to you and show you that, bro, I'm ready. I'm ready. I'm ready. I'm at your service for you to enter. And not it's not every time that he tells you I'm at your service that it's going to go according to plan. It might still go out of plan. Okay, it might still go out of context, but you have to wait. You have to be patient. Let the market come to you. Follow your plans. Don't break your rules because you don't want to trade. Because you have been sitting on your trading desk from morning to 4 o'clock and you have not taken any trade. For that reason, you think that this day is useless. So to avoid making this day useless, let me just take a trade. Let me just take a trade now. That's when you start ruining your plans. And when you take a trade that is out of your plans, it's hurts more than when you take a trade that goes according to your plan and you lose. Remember that. Also, manage risk. Be confident. And confidence comes from backtesting. If you don't backtest, you can never be confident. You can never be confident in your trading edge when you don't backtest. Adapt. Adapt to market conditions. Okay. Adapt to don't be too rigid. If the market is telling you something, be ready to listen to the market and understand what the market is telling you. Self-awareness, be self-aware. Notice when you are having changes while you're doing your trading. Notice when your emotion is trying to creep in. So you don't let fear or any other thing ruin all your hard work. Notice when your emotion is trying to ruin something. If you are if you are in a trade and you notice that you are scared and your brain or your head is telling you, bro, close this trade, or this trade might go into a loss, close it. You better just close with small profits now so you go into a loss. And you are listening to your head, you are listening to your fear. If you close that trade and later in that day, trade runs to TP and you just close out with small profits, or the trade have run to big, huge profits, that's worse than taking a loss. It's so worse. It's worse than taking a loss. Then what happens? You start looking for ways to revenge trade, to go on revenge and get your money back. That's when the market will slaughter you because the market is stronger than you. Okay, so you also need to have mental resilience. So that's what I said. That's what I said when I mentioned your brain telling you do this. You have to be mentally resilient that you can tell the brain, okay, go and sit down, go and sit down. I'm the one in charge. Okay, then you continuous learning. Keep learning. Don't ever stop learning. Don't ever stop learning. Don't ever stop improving. Never stop improving. And also support and community. So if you have a support and a community where you have other people trading, where people share their thoughts, it's quite easier for you to grow. For me, in my journey, I never had a community. Never. From day one to now, I've been on this thing on my own. Okay, I've been on this thing on my own. So it was very difficult. If I've had a community, it would have been a bit easy. So here you can see this is a cycle of market emotions. So you can see this is a new trader. So when you start trading, you are optimistic, you are excited, you are thrilled, and you win trades. This is where you win trade. Maybe you don't even know what to do. You go on a three trade winning streak. Your euphoria is high. You are like Superman. You are unbeaten. And after maybe you risk more than you're supposed to lose, risk, and you lose a lot. Anxiety start creeping in. You lose again. You start feeling denial. You start pushing blame. Then fear creeps in, depression, panic. Okay, and now you are depressed. You are hoping maybe you enter a trade is losing. You are hoping, and now you see the trade after going into deep loss, it comes back to your entry again. You are relieved. Oh, Omo, if I don't lose this trade, but now it's back to my entry. And now you see the trade is coming back to this thing in profit. You are optimistic again. You're just going through a cycle, continuous cycle, going through a cycle. You can't do this. You can't become rich in trading doing this. You're going to die young. Okay, you're going to die young. If your emotions, if whenever you want to open the trade, your heart is beating, boom, 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 do you think you can survive that for 50 years? No. What you need to understand is that professional traders don't trade like that. Professional traders, they feel the same when they are winning big or when they are losing, the same emotion they have, the same way they are feeling when they are losing, is the same way they are feeling when they are winning. Like for this trade, if the trade I'm showing, I just showed you guys now. If I was winning that trade, I would still have the same emotion that I'm having now. Okay, not almost the same because now I'm feeling a bit down because I made a mistake. Not that the trade didn't work or any other. I made a mistake. It was a personal mistake. So with that, I might feel a little bit a little bit down, a little bit discouraged that this mistake, I shouldn't have made this mistake, this and that, this, that. But a trader, as a trader, you should find a way to overcome this. Okay, overcome this. Let your mind be neutral. Just be neutral whenever you are in a trade and whenever you are not in trade. Whenever you are winning, whenever you are losing, just be neutral. So here, this is a trading pyramid. So you can see here, trading psychology is 80% of trading. 80% of trading is psychology. 10% is risk management, and the remaining 10 is strategy. So your dire strategy you are looking at is 10%. Risk management is 10%. Psychology is 80%. Without psychology, you can't do anything. Okay, you can't do anything. Then backtesting and journaling. Backtesting and journaling is very important. Very important in trading. You need to backtest. You need to journal your trade. Okay, you need to um, understand your decisions. Like with this trade now, as I'm taking this trade, what I will do immediately I enter this trade, I will on trading view you have this here download image. So I'll download the image of this trade immediately I enter, not now. Like the time I place this thing to enter, I will download the image. Then I will go to the daily time frame because the daily time frame is the one that I use to, determine my bias, which side of the market am I trading. Okay, if to know if I'm in line with the market, I will take the screenshot of the daily time frame, then also go to the 30 minutes time frame. Okay, go to the 30 minutes time frame, and I will also take a screenshot of the 30 minutes time frame. So with all these things aligned, okay, now you can save that on your journal. The next trade, you still do the same thing. Take all those pictures, save it on your journal. And then after this trade has panned out, once I close this trade, whether I close it in profit or I close it in loss, I will still screenshot it and put it there. And then I will write a few things down. Okay, I'll write a few things down. How did this happen? Why did this happen? What do I think I can do better from what I've already done today? How can I improve? You need to keep them. So if I can show example of my journal, okay, this is actually my backtesting space in the journal. So these are all the weeks I've been backtesting. So you can see week one, week two. So it's almost 16 weeks now. Okay, 16 weeks. And you know you have 4 weeks in a month. So check 16 weeks, how many months this is. And this is on a single module. Okay. So if you can check here weekly FX journal. So this is where I journal all my trades. So as you can see, all the trades I've taken, I journal them. I journal them. So here it's minus 12 pips, 12 pips, 12 pips, break even, minus 9 pips, plus 80 pips, plus 35 pips, minus 20 pips. And then you have the one of today, which I messed up. So I'll still journal that. So if I check this, which one would I check now? Let's say this minus 20 pips. Okay, inside this now you can see the pictures of the trade of how what I was thinking before I took the trade. So you can see the daily. Okay, that's the then the 4 hour, and you can see the 30 minutes here. Then you can see the outcome of the trade. That the trade took me out. Trade took me out on a loss, and then I will write out my thoughts. Okay, I'll write out my thoughts here. Write out my thoughts here. Things I can improve. I'll still write a few things here because I don't think all these things are not that okay. So the same approach. So that same approach, I will still use it on all of this. So I can then sit back and during my weekend analysis and all those things, I can look at these things and say, okay, this is where I did this, this is where I did that. And I check for things that are common with my losses, and then things that are common with my wins. And those things that are common with my losses, I remove them. Those things that are common with my wins, I can look to add to them and make them better. Okay, for all my setups. So it's very essential that you analyze, you always journal. And this my performance. This is my weekly performance. What is all my weekly performance? So you need to take your journaling and backtesting very, very serious. And also a you need to have a book that you journal with. So your journaling book should not be any book. You should not go and buy 60 lips exercise book and say that you're using it to journal. You have to buy a book that you value. It has to cost you a lot. So you can go to a supermarket and buy a very good book that looks like maybe all these olden days, ancient ancient this thing. Okay, you can buy that and use that. Something that's a book that you can look at and know that okay, this book has value, not just any exercise book. If not, you not value it. And you see what you do with that is you you journal your journey, like how things happened. If you had a losing week this week, you write it down. I did this, I did that. This was how this happened. This was how that happened. I wish. I think this is how I can do better. This that. Then you also um write out what your expectations are. What are your goals? What are your goals this month? But also make sure that your goals are not related to money. As a new trader, let your goals not be related to money. Let it be related to improvements you can make on your trading. Okay, so that's about backtesting and journaling. Then I also share this Notion app. This app I just showed you guys. That's this. So now building a trading system. How do you build a trading system? So, like I said before, to build a trading system, you need to understand first what type of trader do you want to be. Okay, do you want to be a swing trader? Do you want to be a day trader? Do you want to be a scalper? Then on that, what do you want to be trading? How do you want to be trading? Like I mentioned, if you want to take example, you look for trend and then you look for area of support and resistance, and then you look for support to be broken in the direction of a trend. Come back, retest that support, that resistance as support, and then you look to buy when it has given you confirmation. That can be a trading system. Then how much risk do you want to use? How do you manage your emotions? If what's your maximum risk per week? What's your maximum risk per day? Okay, how many trades will you be taking a day? How many trades will you be taking a week? All those things are things you are going to put in consideration. Why building a trading system? And make sure that your trading system is the one that suits you. You have to backtest. You have to backtest. You have to backtest your system every week. Keep backtesting every week. Keep backtesting. So if I let me show you an example here. If I go back to that Notion here, so this is a playbook. So this playbook is actually the system, the my training system. That's my playbook. If I go to week 16, this is a week that just ended. So what I do is, so what I do is I take a screenshot of the economic news release for that week. So these are the all the news we had for that week. Okay. Then I take this is the screenshot of that weekly candle. These are the weekly candle that just closed. These are how it looks like. Then I start going through day by day, day by day. So this Monday, this is how the daily was looking. Okay, that's the what I only journal here is places that I actually had a trade. This is the trade. A trade was made available. That's what I only journal. So if there was a trade on Monday, I will look at the chart. If there was a trading opportunity, that's where it fits my plan. Okay, my trading start on Monday. That's what I will take the pictures and put here. So you can see on Monday, this is where you had an entry. Okay. This is how it looks like on the 30 minutes. Then you move on. These two, I think this Tuesday or what. That's how you be doing it. But you just check the charts. Weekdays, do you have this? Weekdays, do you have that? Just keep journaling them. Okay. And if you take care, you can see there are a lot. There are lots. There are lots of trades here. So this is what gives you confidence. This is what gives you confidence that when you see something happening, you know that okay, yes, I've seen this before. So imagine this thing I did here. I've been doing it. I've been doing it. I've been doing this all throughout this week, and I will continue to do it. I'll continue to do it even in the next 5 years. I do this every single weekend, every single weekend. I do this, and then these ones here, I do them every single day. Every single day when I take a trade, I do this every single day when I take. These are the things that will build that will build you up to having winning streaks. Okay, if you cannot do this thing, don't expect you having win streaks. Because win streaks come from you know your strategy. Just like saying, know your lane, stay in your lane, and own your lane. You have to own it. You have to own your strategy. It has to be you. It's like a marriage. It has to be you. You and your strategy needs to become one. Okay. So I hope you guys understand that. Then your risk management, trading with discipline, refining and optimizing. So with all this in our journal, if I look at that, if I look at all of them, I will merge them with my trades and see where I can refine, where can I optimize, where can I make it better. Okay, like the way I trade now, that's not how I trade before. It used to be a little bit difficult, but then through backtesting and refinement, I was able to make it easier. It's a bit easier now, and I think it can still be much more easier than it is now, which I'm working to do. So you just have to find a way to make your strategy very easy. It needs to be very easy. If it's not very that easy, winning streak it can never be your portion. So yes, set a clear rule. Set clear rules. Let your rules be clear. Write them down. Write your rules down. Let it be so clear and never break them. Never break them. Don't beat about the bush when setting clear rules and follow your rules. Then you have monitor and evaluate, adapt to changing conditions, continuous learning, risk and capital management, review and revise, seek feedback and guidance. Okay, if you're in a trading group, if you have a mentor, you seek feedback from him. When you are finding it difficult, you seek feedback and guidance from him. Then note, your trading system should not be complicated. It should not be complicated. If you are complicating your trading system, you are doing yourself wrong. It should be so simple to understand and so short in writing that it can be written in the palm of your hand. It should be so short. If you're explaining your trading system to somebody, that person should not be writing notes. You should not be writing notes to the person. It has to be so short that it has to be A B equals C. Okay, or A B equals CD, not something. No, don't write a pistol when you're writing your trading system. So always look to reduce parts while increasing efficiency. The best part is no part. So this is what Elon Musk said. The best part is no part. Okay. If you are trying to make your products easier and more cheaper, you have to work on reducing parts while increasing efficiency. You need to increase efficiency. Not all these people that for them to reduce price, they have to reduce quality. You know, you have to make sure that you are reducing price while the quality is increasing. Okay. Yes. So building a trading routine. So this is the last one, to build a trading routine. So what's a routine? A routine is just like things you do every day that sets you in line, that puts you in the right mental sphere every single day for you to go into the market and be able to trade with your head in line. Okay. So like a routine can be can I just gave an example here. Let's say Monday to Friday, you say to yourself every Monday to Friday in the morning I wake up by 5 a.m. So that's for me, I wake up by 5 a.m. So this 5 a.m. I used to wake up with alarm every day. I will put an alarm to wake up by 5 a.m. But now my brain is now inclined to that method that even if I don't put an alarm, once it's 5 a.m., I'll just wake up. Like I'll be sleeping, I'll be sleeping, I'll just wake up and check my time. It's 5:30. So these are things your brain can, once you do something over a period of time, your brain just grabs it and start doing it. If you start going to urinate, once it's 12 o'clock, you go and urinate. Once it's 12 o'clock, you go and urinate. You will find out that even without you knowing, once it's 12 o'clock, urine will start. Urine to urinate, you start hungry. You want to go and urinate because your brain has been programmed to do that. So your brain is like a computer. Once you program it, it just happens automatically. So wake up at 5 a.m., analyze the chart. Okay, have a 30 minutes mental warm. So what can you do on a 30 minutes mental warm? You can take a visualization and warm up, that you visualize your trade, that you visualize that you're in a trading position and the trade is about to hit your stop loss. It's about to hit your stop loss. And you visualize how you manage yourself during that time the price is about to hit your stop loss. Okay. Okay, you visualize it every morning. So if you after visualizing that and you're actually in a trade and it's about to hit your stop loss, you're not bothered because you have already seen it happen. Then also you visualize yourself running in huge positions, like big money, huge money. You are running in huge position. So this trains your mind that when you are running in big position, you're not scared or something like that. Then analyze your pairs to see how the markets reacted overnight based on your previous night analysis. So here I also say analyze your pairs every night for the next day. So once the market closes, you analyze, and then when you wake up in the morning, you also analyze and see what's happened and how you can move forward. So log your trades on your journal after closing, in profit or in loss. Analyze your trades every night. Look for places you didn't do well for improvement, and places you did well for more implementation. Okay, then you analyze for the next morning. Then on the weekend, you backtest your edge. You journal. You write out things that didn't work out well for you in the week, how you can improve, how you can go forward. Then study. You can study 2 weeks of backtested data. So like what I did show on my notion. So like if this week end now, I will log the one for this week. Then on Sunday night, before the market opens around 10, I I go through this week, this particular week, and this one. So I go through these 3 weeks. I'm trying to train my mind to see what happened on the previous week. So when I see something like that this week, I can still take those trades effortlessly. Okay. So what else? Then also prioritize self-care and wellness. Make sure you're healthy. Make sure you're eating healthy. Make sure you're sleep. See, sleep well. Make sure you're sleeping well. If you cannot sleep well, you cannot trade well. Live a healthy lifestyle. Don't drink too much. Don't smoke. All those things that will affect your body. If your once your body is affected in any way, your mind is affected. You need to be healthy. You need to take good care of yourself mentally. Okay. So your daily routine should not only be based on trading. You can also have something like taking a glass of water. When I wake up in the morning by 5, I'll take a glass of water for it to refresh my body, for it to wash away every toxin in my body. So when I wake up, I take a glass of water, or even doing 20 push-ups. Whenever I wake up, I'll do. You want to do 20 push-ups so you can feel energized, or say you are listening to a word of upliftment, word of affirmation every morning, or you wake up and you pray to God and remind Him, okay, God, see this thing I'm going through. I need you to help me. I know that you're with me. All those things. You just have to find the one you want on your as your daily routine, and you have to keep doing it. Let it master you. Let it master you. Every successful human being on this earth has a routine. That's the routine that they're following. You just have to find what works for you. That's all. Okay. Building a trading routine that suits your style, goal, and lifestyle is essential for success in the financial markets. It helps you stay disciplined. So once you are disciplined to do all these things without missing anyone, you are going to stay disciplined while trading. Once you're disciplined, organized, and focus on your trading objectives while minimizing the impacts of emotions on your decision making. Okay, focus, keep focus and minimize emotional whatever. Don't let emotions come in. Once emotions is coming in, that's when you are vulnerable. You shouldn't be vulnerable in this market. This market is this war. You shouldn't be vulnerable. You shouldn't come to war and you are scared. Okay, because war and you are scared, they will just cut you off. Okay, so I hope you guys have got a lot of insights in this. So in conclusion, overcoming the learning curve in forest it's not a small thing. It takes hard work. It takes hard work. You need to be willing. You need to be willing to get slaughtered on a whole different level. Okay, it's hard work, and not a lot of people can go through this. Okay, because when you start slicing and dicing and going through all those deeper shit, it's mental. It's mentally draining. But you have to be mentally strong just to come out on top. Okay, so it says here a lot of traders hop from one strategy to another looking to find the holy grail, and that's 100% win rate. They're looking to find 100% win because they're going to Instagram and they're seeing people posting blues. Like if you go into Instagram is just so mad now. Once you open Instagram, you just see everything forex. You see people showing profits. They are in 100 positions. Some of them is blues. They are seeing $200,000, $1 million in floating profits. And you think those people don't lose all those things. They have 100% win rate. They don't share their losses. They just share their wins. So find one strategy that works. Find something that works. How do you know it works? Through collecting data, through backtesting. Okay, stick to it, and no matter what, for at least 6 months, stick to your strategy for at least 6 months. Keep refining, keep refining, keep refining, keep making it better. Okay, think risk before reward. Always think risk before reward. Case of social media, don't follow anybody on social media. All these people, all these mentors, don't follow anybody. If you're following them, you're killing yourself. Because when you lose a trade and you go to Instagram and you're seeing somebody who's making money, it will just damage your emotions. Okay. Keep off social media. Okay, blah, blah, blah. Then remember losses are part of the game. Remember that losses are part of this game. You can't go anywhere without losses. I've had my improvements. The best improvements that I've had in my trading came from moments of drawdown. It came from losses. So once losses come, that's when I go back. What can I do better? This and this, that and the other. So once you have passed through all those losing streak, that's when you come back stronger. Okay? You just have to stay. You just have to be willing. You just have to know that you can come back. If it's in you and you know that you can make it in this game, regardless of what everybody says, eh? And you know in you that you can make it, that you can come back from your losses. You can go through all of those things and you still come back and you'll be stronger. Big losses, big downfalls. Coming back from those losses and those downfalls builds strength and character. Okay? It builds strength. Don't ever think that winning streaks build strength. Build strength. Winning streaks doesn't build strength. Losing streaks, they are what build strength in this market. And you get those strengths to come back when you have come back, when you have done the groundwork. Okay? Make sure you do your groundwork every day. Going on a 10 trades winning streak is very much achievable. Okay. You can attain this level of winning streak, 10 trades winning streak. But that comes with years of discipline and practice. There have to be years of discipline, years and years and years and years of discipline. Don't look at these people that are posting. These people are way ahead of you. They can be 7 years into this business, 8 years, 10 years into this business. You are just 2 years and you are looking to do win streak while you are still hopping from one strategy. You're not gonna do that. It takes years of discipline and practice before you get to that level. Mhm. So make sure you stick to your strategy while refining it to becoming easier to apply till you are one with your strategy, just like man and woman, just like you and your wife. Okay, when you marry, you and your wife are one. You and strategy should be one. Only then can money flow from all corners, or from all corners with less and less effort. So this thing should be with, sorry, so with less and less effort. Always think in probabilities. Think in probabilities. Always think in probability. Don't think on a trade by trade basis. Think in a series of trade basis. Okay, think in years, not days. Think in months, in years, not even months. Months are too short. Think in years. Where will I be in 3 years if I keep doing this like this? If I keep hopping from strategy to strategy, from this to this, from this method to that one, where will I be in 3 years? If I stick to this and keep backtesting and keep trying to improve, where will I be in 3 years? So ask yourself all those questions. Don't sweat the small stuff like losing a single trade. If you lose a single trade and you are sweating and you're angry at this, you're not ready. Okay, just keep following the plan. If you lose, follow the plan. If you win, follow the plan. If you lose, follow the plan. If you are losing 3 times, if you are on a three trades losing streak, follow the plan. A good trading day shouldn't be defined by a win, and a bad trading day shouldn't be defined by a loss. It should be defined based on whether you followed your plan or not. So when you follow your plan, that's a good trading day, whether you win or lose. When you don't follow your plan, that's a very bad trading day, whether you win or lose. Okay, and actually losing when you didn't follow your plan is very is better than winning when you don't follow your plan, because that teaches you to not follow your plan. That teaches you bad habits. Okay, be irritated by breaking your rules. Anytime you break your rules, feel irritated. Feel that you have sinned. Anytime you just break a rule, just feel make yourself feel that you sin. It's a very big sin and you need to go and ask for forgiveness. Okay. Once you're irritated by breaking rules, you go far in your journey. Learn the skills. Learn these skills. Prove to yourself, not anyone else that you are capable. Just prove it to yourself. Prove it to yourself that you're capable. Then, if you can prove it to yourself, then this is when you go for funding challenges. This time around, there are companies that are fund traders. Okay, the fund traders money to trade with, and when you pass phase one, pass phase two, they actually fund you with something like Raymond. It looks like Raymond is about okay, they just fund you. Just take it that they fund you, and every profit you make, you get a profit split. So this is actually the best way to accumulating big capital and trading. So accumulate this capital and enjoy life. Enjoy life, okay? When you make a withdrawal, spend it on when you make money in forex and you make a withdrawal, spend it on yourself. Buy things, buy yourself a shoe, buy yourself a watch, whatever, buy yourself clothes. So when you are going through a drawdown period or a losing period, you go and wear these clothes. When you wear it or wear this shoe, you look at it and say to yourself, forex give me this money. This money I used to buy this thing, this watch I'm wearing it came from forex. So you know that this market can actually change, can actually give you something in life. You can actually get something from this market. That's a form of or let's say what would I call it? That's a form of upliftment and encouragement. So there is a lot of money to be made. A lot of money to be made. Remember, it's 6 trillion a day. Oh. Remember, it's $6 trillion a day volume in this forest. So even you getting 0.0001 of that $6 trillion, this is 0.0, this is too much. Sef. You getting 0.00001, 0.00001 of that $6 trillion will change your life. So what are you looking for again? To change your life. But the work is hard. The work is suffering. Okay? The work is suffering. So I hope to see you guys at the top. Hope to see you guys at the top. After you are done with this, I will I will then move you to the the main channel where we post analysis. So I hope with this you can be able to understand if I'm giving analysis, because I won't come there and be talking about support. I don't talk about support and resistance there. We give advanced analysis. So do your own studies. So you don't come there and start asking questions that are not, that's unnecessary. Okay. So that's for this course. Um, putting all this together took a lot of time. So I hope that you guys will also put in a lot of time so you don't allow my work to go to waste. Don't allow my work to go to waste. So that's that. That's that. Take care. Take care. put in the work, and you will see yourself growing in this business. Okay. Take care, guys.